our arguments are really threefold. Number one, it's the state of the consumer. You've got 3 million private sector jobs, 700,000 job creation over the last year in the 25 to 34-year-old cohort, strongest it's been in 15 years. 30% of the 18 to 34-year-olds are living with their parents. We see that as a lot of pent-up demand. Secondly, inventories. You're at 15-year lows, both in terms of absolute inventories and inventories as a percent of the population. And the pent-up demand, we think, is going to start to come through because basically you've added 1.5 million in household formations over the last year. That's now starting to see a significant recovery. If you look at the details, Brian, of the earnings reports of all the companies, this is the third reason. Credit is starting to pick up in the economy. The supply of credit through the banking channel, all the major 4 banks reported double-digit growth in credit availability, and demand for credit is coming back. You're seeing that pent-up demand come back into the marketplace. You literally have 5 million people who lost their homes in the prior recession. Over the next 5 years, they potentially could come back and buy houses again.
From a technical perspective, you're correct. I think that we do definitely see in the short term the possibility that prices could go up into the high 30s, actually. But from a fundamental perspective, and the view that we've held since April is that we expect that prices would actually rebound into the mid-60s by the end of the year, and possibly even reach and average into the 70s for Brent by the end of 2016. And
you're sticking by that because we got about 4.5 months to go in the year, and we're in the low 40s.
Yeah, we are sticking by that forecast. I think that at this point there are a couple things that the market is discounting. The first thing is that Iraqi oil production is not going to be able to be maintained at these levels. Second thing is that we think that demand is underestimated. We already saw a 400,000 barrel a day upward revision to IEA's demand estimates. That's more in line with our estimates that we put out last month. So we revised upward our demand estimates up into the 1.5, 1.6 million barrel a day level for 2015 and 2016. And then finally, we think that U.S. production is going to start to falter. It already has in some cases, and we expect it to be down about 100 to 200,000 barrels a day by the end of the year. And that reality coming through is going to support the market in our view.
I like Adam's enthusiasm for the company. I don't share his enthusiasm for the stock price. I also am very excited for computer-driven cars. However, I think that this technology is at least 5 years or greater before we actually see it available on the cars we can then purchase. I see what will drive the stock, as what drives any company's stock, is the sale of their products. As they roll out new models, as they have the Model X coming and future models like the Model 3 and sell more cars, that will drive the stock price. Whether it has the self-driving or computer-driving capabilities can be an option in that car, as it will probably be an option in many cars. So I don't know if that's the pure driver as much as it is the quality and the features and the performance of the car that is the driver of the sale of the cars.